Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I got a returning guest on the line. He's been on the show a couple times, but turns out he hasn't been on for about just a little over a year now. He's an expert when it comes to precious metals and the economy and really analyzing what is going on and the pulse of the global markets. And of course, that has a lot of implications on, where we as individuals put our money to be on the right side of the trade, the longer term trades to benefit ourselves and our families and those that we love. I have on the line with me Claudio Grass of the Precious Metals Advisory, Switzerland. He was just at a conference where he spoke in Liechtenstein, and his title and what he was talking about was the denationalization of money. And so we're going to be discussing the implications of this. His website is claudiograss.ch, and we're going to be hitting the hot topics of gold, what's going on with the Fed, what's going on with the economy, and what are the implications of this going forward. Without any further ado, Claudio, thanks for coming on Crush the Street with me today.
Ken, always a pleasure talking to you.
So quite a different time for precious metals here in October of 2019 than it was in September of 2018 when we last talked. So $1,200 gold, kind of take us through what we've seen from $1,200 gold last year and the sentiment to where we are today at $1,500 gold.
Well, I mean, what can be said over the last 12 months, of course, we had a complete U-turn of the Federal Reserve, which started less than a year ago, and which we now can see that they even go further with the new monetary policy of repurchasing debt and injecting liquidity into the system. Overall, there's more stress in the system, and I think that's also why gold prices spiked. However, what can be said is that the price rise of gold did not came from the physical retail market. Mainly, it was really driven by the ETFs and the institutional side and central banks purchases. Because when I talk to precious metal dealers all over the Western world, in particular, some people let's say 70% were still selling gold over the last few months. And only about 30% were purchasing. So this just shows that, even right now, that gold made a nice performance. And right now, okay, it can be said that we are most likely in a correction phases, which is it's a good fit, with every bull market that has started. So I still consider, gold is definitely in a bull market right now, maybe in a consolidation, which is healthy. Basically then to go up onto the next levels, which we're going to see in the short run, most likely, because the main cause is definitely that look at the central banks. The Fed basically turned away from taking off, 40 or 50 billions a month. So now they are starting to repurchase treasuries, 60 billions per month, plus injecting liquidity into the repo market, which we have seen, since middle of September when the repo overnight rates went up to 10%. That they really had to inject. I think since then roughly 180 billion already before they even started, to repurchase treasuries. And of course, also, the guys Powell and so on were saying, it's nothing to worry about. It's just, they had to do it. He basically said, this is a mere preemptive insurance move to protect and sustain the economic expansion, which should not be construed as a warning sign of economic trouble ahead. That were his words. It's just a joke. And of course, the same goes on the ECB. They even reduced. We are the heroes when it comes to negative interest rates, which is an idea which does not make sense at all, which is completely stupid. But we have that over here in the Eurozone and also the Swiss National Bank, for example, So yeah, they went from minus 0.4 to minus 0.5, and at the same time they were also announcing that they start repurchasing assets again. I think overall, it should be clear that we are not going towards a phase where everything will be shiny. I think volatility is back. The uncertainties in the financial system are also growing, and therefore, I see in the mid run only, increasing precious metal prices. And of course, when all the central banks start injecting liquidity again, we are not far away from quite a substantial depreciation of fiat money.
Claudio, I'd like to talk a little bit about the reversal that we've seen. I mean, what sort of shock was it to the system that, we had this repo illiquidity crisis where interest rates spiked that seemed to come out of nowhere? No one was really expecting that. What does it say about where we are right now? I know you alluded to it a little bit, but I mean, talk to us a little bit about how this just was like something that came out of nowhere that no one really would have predicted directly. I mean, yeah, we know there's an interest rate problem, but I mean, this specific thing seemed to surprise everyone.
I mean, over the last few years, we really went through a deflationary central banking policy. And so far, I mean, even they tried to calm down the markets and, keep the investors happy with positive information coming from the central banking side. It just showed, that now even the banks, I mean, we are back in a situation where we had it in 2008, 2007, where banks don't trust each other any longer, to lend money overnight. And so that's why, it spiked from 5 up to 10%. I mean, it just shows there is stress, there is mistrust again in the system. And that's why we now have seen, the central banks jumping in and trying to cure the cancer with, the same old recipes as we have seen in the past. I mean, yeah, we injected 80 trillions over the last 10 years of additional credit, and 1 trillion is basically, if you count it in seconds, it represents 31,709 years. So, basically the central banks bumped us back to the Stone Ages 80 times over the last 10 years. And one fine day, that needs to be forgiven or it needs to be repaid. And I think we are at, of course, we are at the end of a long-term debt cycle. We're at the end of long-term generational cycles of all different kinds of cycles, which are all coming due in 2020, 21, around that time. So I truly believe, we are over here in Europe, the guys who have an open mind and eyes that can see, and they also look through the propaganda which is coming from the mass media. I think, these guys are certain that we're going to see a banking crisis within the next 12 months. And we are already in recession territory over here in Europe. And all these banks, I mean, the banking system has been made for positive interest rates, but definitely not for negative interest rates. And now all these technocrats, which are using those risk models, how to judge and how to define potential risk in the system, they cannot interpret the data they are given because of negative interest rates. It's completely distorted. And so, I think the outcome is, the banking system has been squeezed, especially in the Eurozone because of the negative interest rates. And now we will see, the tumbling of the bigger banks in Europe. And at the same time, all these negative interest rates and cheap money basically accelerated a kind of zombie economy, which is considered roughly 15% of all the companies in the Eurozone, but also 15% in the USA are so-called zombie companies living off cheap money, not producing, not making money with the business they do, but basically living off cheap money to prolong their business activities. And they will all fall apart as soon as we're going to see, that liquidity crisis, especially in the Eurozone. And then we are talking about roughly 50 million employees, which are going to be affected by that. So, that's where we are going. The future doesn't look bright. But at the end of the day, yeah, you know, it's a system of collective corruption. So,
Claudio, could you just reiterate that? You said, if I got that correctly, 15% of zombie company are 15% of companies in the Eurozone and in the US are zombie companies. And that is implicable to 50 million people.
in the Eurozone, you basically, you know, the figures are that with those 15%, zombie companies have an impact on a total of 50 million employees.
Mm. Wow.
So, I mean, the next banking crisis is going to be, yeah, pretty big.
Wow. I mean, that's just super telling when you just show the facts like that. And it's so hard to know exactly how things are going to play out, right? You know, one thing that
Absolutely
was crossing my mind the other day is like somebody who, you know, has an overweight issue, right? You know, we think they're going to die of a heart attack or a stroke or something like that, but yet they maybe they just, you know, they fall down and hit their head and they're in the hospital, you know, just because they're 100 pounds overweight, you know, and they're in the hospital for 10 years on life support. Still because they ate and they were overweight, but it's just, it didn't play out exactly how we thought, right?
Yeah, right. Absolutely.
So anyways, yeah, so let's talk a little bit about, you know, what you discussed, and I'm sure you were covering it a little bit in what we were just discussing here, but at the conference, the denationalization of money and the implications of this. Talk to us a little bit more about that speech you gave, and what does that mean, the denationalization of money?
Okay. Well, basically, you know, the conference took place in Düsseldorf, Germany, but it has been organized by the European Center for Housing Economics, which is domiciled in Liechtenstein and led by Prince Michael of Liechtenstein. And then we also had the Hayek Society in Germany and Real Unit and Core Ledger, two companies who are sponsoring that event. And I basically helped to organize and to bring the speaker and, you know, the audience together. And the topic, yeah, I mean, you know, why should we? I mean, we all know that government never gave us good money. So why should we accept any longer, you know, to take money from the government, especially now when we know for sure that, it's going to depreciate rapidly over the coming years. And so if we combine now, of course, you know, technology. So one of the backbones definitely is the internet. And I always have to say it. I mean, you know, every coin has two sides. You have the centralized side when it comes to the internet, which is the one we are witnessing, and with Facebook and Google. So basically, centralized structures built on top of a fully peer-to-peer, fully decentralized open source internet system, which can in the future, you know, link up every individual with each other without having guys interfering in between. So meaning, you know, the new system will be fully decentralized, and we will take out the middleman. So we will take out the banks, we will take out the central banks, and we will even take out the governments. Meaning that if you are already today aware enough and you understand the internet, you know, you already today you can ignore the king. You don't have to kill the king. So. And I think that's the other side of the coin. You know, it's not only about surveillance and spying, because therefore you always have to use the tools that are given to you, which allow that kind of government interference or centralized approaches. So people really have to look at the other side of the coin, decentralized one, and which will empower the individual, and will also lead to more freedom. And less surveillance and observation, because it's like, you know, the internet took away the information monopoly from the government. At the same time, it helped, you know, spying much better on us. And when it comes to money, basically the internet is going to take away the monopoly over money, the money monopoly away from the government. And we're going to end up with like an initiative that I'm also heading up is Real Unit, for example. It's a Swiss-based company that wants to establish the first private Swiss currency, backed up by real hard assets stored and also domiciled in Switzerland. and you can buy, these property titles. Basically can be tokenized, and then you can trade it on the blockchain as a new real currency, which is definitely going to increase in value and not depreciate in value because it's linked to hard assets and also to productive assets. So these are just catalysts within a system which is becoming more and more totalitarian, but at the same time it's doomed. I mean, the outcome needs to be, it's going down the drain in the future. We don't know exactly when, but in the meantime, you will find private initiatives because with the internet, every real good can become money. And
Claudio, you kind of alluded to it a little bit. I don't know if you want to inject yourself in American politics or just make it kind of more general, or, maybe no comment at all. But, what in a general sense is going to be the blame for the collapse, the reset, the correction, the big recession, the debt implosion? It seems like there's this push to socialism, this collectivist, globalist society, and if we do have some sort of meltdown, it's going to be very easy for these globalists to repackage this and say it's the fault of the free market capitalism, and usher in extreme socialism globally. So that's kind of my bias towards things. What do you have any thoughts on this?
Yeah, well, it's a good question. I mean, today we are not living in a capitalistic system, because for a capitalistic system, you need free markets, you need division of labor, you need sound money, you need decentralized structures, so the individual stands in the center and the individual acts. And so this is, private property rights. That's the basis. Self-responsibility, that's the basis of capitalism. We are in a system of heavy socialism. You can, any kind of ism at the end of the day means you have a small amount of rulers who rule over the rest of the people. And now when we can see that, if they can implement negative interest rates, and they just can print money out of thin air, and they also decide who is going to trade with whom, it has nothing to do with free markets. So we're going forward down the path of slavery at the end of the day. But it will always, we have seen in the past, whenever an empire or a big system crashed, the outcome was more positive afterwards. We always started on a higher level of when it comes to individual freedom and liberty, and capitalism basically has created all the wealth, all the goods and services, and not the government and government planning, because otherwise the USSR would have been the perfect solution to go ahead in the future. And we have seen that, especially we have seen that even these guys collapsed.
Claudio, you bring up a good point. If we had free market capitalism, negative interest rates wouldn't even exist. My goodness, it's a casino that we've now turned the bond market into because of negative interest rates. So, just maybe let's talk about, round this off here, some closing thoughts. How do people protect themselves in this unprecedented environment, this environment where we really haven't seen before? There's no model to go back and say, oh, we've seen this in 1956, and this is how it's going to play out. Things are just not apples to apples. The U.S. is in a different place than it was that many years ago. A lot of other countries have caught up to the U.S. China, for example, by certain metrics is larger than the U.S. now. And we have a largely U.S. audience, Western audience. So, any thoughts on what people can do to start to consider how to protect themselves in this environment?
Well, at the end of the day, I think everyone that remains within the system, is, with a few exceptions, which are standing at the top of the system and also make the rules, these people are going to lose tremendously over the coming years. So of course, one, the easiest is, to at least move certain assets outside of the system, meaning you go into physical gold, you go into physical silver, you can even go into base metals, in hard assets at the end of the day. I think hard assets will be one of, you cannot print hard assets. So, at the end of the day, I think there is a lot of potential. I know one guy who basically is trading over here. He has the biggest rare earths and base metal storage facility here in Switzerland. And he is basically trading base metals, and there you can also make a sound return on the investment. And at the same time, you don't have, your money is not within the system. It's basically stored in hard assets, which are stored in a sound jurisdiction such as Switzerland. So I think hard assets definitely is something. Then the other stuff is, look at, I don't know, when it comes to, the cryptocurrencies, I think that's the way to go. I don't know if a Bitcoin is a store of value. I don't believe it is like this. We don't know, we even don't know what is going to happen when the last Bitcoin is going to be mined. So when the network cannot make profits any longer, what is going to happen to that network? So these are all, certain questions. But at the end of the day, I think the combination of hard asset and technology, which is in favor of decentralization and the individual, and therefore also technology companies which are operating in that environment, but which have a sound business model in the back, and not coming as so-called government agents trying to pay people back into a controlled in a total control system. I think if you go for the right partners, there will be a lot of possibilities to hedge against all the risks which are linked with the current system.
Well, there you have it, everyone. Claudio Grass of claudiograss.ch, that's his website, the Precious Metals Advisory, Switzerland. Claudio, thank you so much for your time, your valuable time, and sharing your insights with us here at Crush the Street. Once again, $1,500 gold, everyone. I truly believe the window of opportunity will be closing. And it's interesting what he said. 70% of retail people are selling while only 30% are buying. It's the central banks, the ETFs, the big smart money that is accumulating. They don't always do the right thing, let's say, for the people, right? Especially when it comes to central banks, but they're definitely in the know. I would give them that. So I would consider that when considering precious metals and what to do with your future. So Kenneth Amaduri here signing off. Claudio, thanks for coming on Crush the Street with us today.
Ken, thank you very much. Always a pleasure talking to you.